Just 7 minutes left to go, and it's time for the closing countdown. We're down 30 points or so on the Dow. The S&P is still positive. Let's trade the close with Mike Gibbs, Director of Portfolio and Technical Strategy at Raymond James. Mike, what are the key levels you're looking at? Is there more upside or downside from this point?
You know, I think that the market's digesting the gains. We rallied 10.5% in 29 days after the May low. We pushed the market up to a forward multiple of about 17 times. That's where it peaked if you go back and look over the last year and a half. So I think for the very near term, I think the market's consolidating those gains. But as it consolidates, you'll either have the market pull back a little bit, or you'll have the sectors rotate and maybe some pullbacks in that. And we would be buying those pullbacks if it happens, because the backdrop for this market's still constructive. We still think that over the next 12 months, we got a market that's positive. Our estimate's 3106 for the S&P over the next 12 months. That's about a 4% gain. So it's real important that if we do get some weakness during this earnings season, that you buy it, because that gives you the opportunity to enhance the return in an environment that may not be that large in terms of percentage return over the next 12 months.
Mike, you're saying if we do get some weakness, because you believe that the downside may be somewhat limited here. Why?
Well, I think it's limited for numerous reasons. Number one, the Fed has already signaled that they're going to cut rates this month. The Fed has signaled that they're there for us if they need to. You look at the market turnaround today, there were a couple of Fed members that made some comments, and we had a market that was down, then all of a sudden it turned and rallied on that. So I think you have that as a backdrop. I think the G20, we passed that without blowing the markets up. Yeah, we got a long way to go in trade. We all get that. But I do think both sides will continue to handle it with kid gloves and sort of just keep prolonging the process. So with that as a backdrop, I think that we have limited downside to the market. Probably, during earnings season, maybe we trade down to the 50-day moving average. That's a 3% pullback if we get that much. And until something changes with the narrative being maybe the Fed shifts or China-U.S. trade really gets in trouble, then I think we're okay. You're looking at the economic data. Yeah, on the manufacturing side, you're hearing some of the companies on that side come out with some cautionary comments. Well, that's expected. The manufacturing side of the economy has been moving lower for the balance of this year. The consumer's fine, and all the other economic data looks fine. So I think we're in a situation where you buy the pullbacks. The pullbacks are going to be limited for the near term until something changes the narrative.